Let's talk about how to read an insurance policy. Okay? Because I think this becomes so very, very important. If we do business with somebody, we often ask for the declaration pages. Well, the declaration pages are usually the first 3 or 4 pages of the policy that summarize the policy in terms of coverages, limits, dates, and premium. They're the front pages. When you read the declaration pages, it says they cover everything. It says I have coverages for general liability, I have coverage for product liability, I have all of these great coverages. But if you read it from the back, which is what I encourage everybody to do, why? Oh, they tell you what they don't cover is in the back. All of the exclusions of a policy are usually in the back of the policy. So I say, read the exclusions first. And it's so basic. But if you read what the policy says it doesn't cover, then you can sort of look at it and say, okay, so you said you covered all of this, but when I take all of this away, what are you really covering it for me? And that becomes so very, very important. So read them from the back. Make sure you read the exclusions. And let's talk about cost drivers. I get people who send me an application and we ask for financials, and you're just starting out, you're going to open, and you tell me the first year in business you're going to do $5 million worth of revenue. Well, you know what? I hope you do. But the reality is that you and I are going to have a conversation. Because I'm not making you a loan. I'm charging you for insurance. So we're going to have a conversation that says, let's be conservative. Don't give me your best case scenario. Give me your worst case scenario and then some. Why? Because the carrier is going to charge you based off of how much you tell me you're going to do. So if you tell me you're going to do $5 million worth of business, you're going to pay one price. If you tell me you're only going to do $500,000, you're going to pay another, which is going to be a whole lot less than the $5 million. Now, mind you, all of these are auditable policies, which means if you've underestimated, they're going to come back and charge you. So let's play this game. You put in a policy that says $5 million and they charge you X. All right? Now, what happens if you don't hit your $5 million number? You overpaid. And how much do they give you back? Zero. Exactly. You've played this game before. Okay. If you overestimate and you overpay, the insurance company doesn't give you any money back. Okay? However, the flip side, if you underestimate, okay, you know, if you put down 500,000 and you do $1 million, what are they going to do? They're going to charge you on the additional 500,000. That's called an audit. So when they audit the policy, if you underestimated, then they're going to say, oh, you owe us for an additional 500,000, and you're going to have to pay a little bit more. But the reality is you did the business. I don't want you to overpay. I want you to be conservative and underpay. And yeah, I'd rather you owe the insurance company a little bit of money rather than them not giving you any back. See where I'm going with this? It just makes good business sense to make it all happen.